All right, good afternoon, everybody. Thank you so much for joining us today. I'm Lisa Partida with Home Again LA, and today we have Tom Fuentes with Bank of Hope, and today's topic is going to be you can bank on it. So it's just some information regarding banking services, and I'll pass it on to our expert, Tom. Thank you.
Thanks, Lisa. Yeah, so this one is kind of like our Banking 101. It's like our introductory financial literacy course. Um, so in the first section, we're going to cover financial institutions, and we're going to talk about banks and credit unions. And the key takeaway from section one is consider your needs and shop around for the financial services that um, you know, that you need. So, financial institutions, banks, and credit unions. So, there's key differences between both institutions. Um, so, uh, banks and credit unions are pretty similar. Um, Banks have customers where credit unions have members. You have to meet a credit union's criteria for membership to open an account. So that would be like a place of worship, for example. So like I have an account at Christian Community Credit Union. But there's also different types of associations that you could be in, like a military veteran. You could have a police association affiliation, things like that. Credit unions are not-for-profit organizations and they're owned by their members. Most banks are owned by shareholders. So, like, I work for Bank of Hope and we're a publicly traded company. The products and services that financial institutions differ also. Most will offer at least one basic checking account and savings account product, but other products and services are going to vary, and access to those accounts are going to vary too, such as the ability to access your funds through ATMs and things like that. Banks and credit unions are regulated and insured to keep your money safe. Let's talk a little bit more specifically about that. So, the Federal Deposit Insurance Company, or FDIC, is a U.S. Government that the entity is, when you hear of FDIC insured, that's what it is. It was established in 1933. FDIC deposit insurance protects you if the bank fails, meaning that if the bank closes, you're backed by the full faith and credit of the United States government. You'll notice that you'll see some of these placards inside banks, like when you physically go in at the teller window, you'll see them. The FDIC provides insurance of at least up to 250,000 per depositor. So that means that if you have dual ownership over an account, so for example, I have an account at my bank with my wife and I, that means that I get 250,000, my wife is 250,000, meaning that our joint checking account is FDIC insured up to 500,000. To check out more information about the FDIC, you can see the website right there, www.fdic.gov. Credit unions are governed by the NCUA, the National Credit Union Administration, which is a U.S. government agency. Um, a little bit different from the FDIC, but the rules are similar. You get up to $250,000 of insurance as well under that. And remember, NCUA, that's if you have an account at a credit union. So accessing services. So financial institutions may offer access through retail locations like branches. When I first started my banking career, I was a teller at one of our branches. Um, you can have access to your money through ATMs, automated teller machines, customer service through phone numbers or through the bank's website. Some banks offer a chat through the mobile app too. Um, Along with the website, you have access to online banking through smartphone apps too. And that's with mobile banking services. Um, there's also things to consider, um, such as access to things like money orders, cashier's checks, the ability to wire funds, things like that. All different services. All right, so deposit products would include things like checking and savings accounts. Credit products would include things like loans and credit cards. And then other products and services would be like I mentioned, like cashier's checks and money orders and things like that. Deposit products include money market accounts too, so that could be also an option. With both checking and savings accounts, direct deposit can be available so that your employer can deposit your money right into your account instead of giving you a physical check. One of the key differences, remember that we talk about with the financial literacy workshops, the difference between a checking and a savings account. The savings account is there for you to set aside money so that you can start building a savings account, building wealth, building an emergency fund, things like that. Separate from the checking account, which is what you're using as a daily transaction account. That's when you're using your ATM at the store. That's when you're writing a check to pay your utility bill. That's when you're doing things like that. So the savings account, different, also different from something like a certificate of deposit account or a CD, which is also used to set aside money for the future, similar to a savings account, but typically these lock your money into a term. For example, some certificate of deposits require you to deposit your money for 5 years, and you don't have access to that money for 5 years. But sometimes they pay more interest than savings accounts generally. There's also things like money market accounts, which are also similar to CDs and savings accounts. The difference being is that on a money market account, you have access to your money, unlike a CD, until the term's over. Money market accounts often pay more interest, which is the money that the bank is paying you for you storing your money at their institution. But they all often involve higher minimum opening deposit requirements. Remember, we talked about aside from deposit accounts, there's the credit products too. Credit cards are revolving forms of credit. That means that you borrow money over and over again up to the credit limit that you signed up for. Lines of credit are similar to a credit card and allow you to borrow money up to a certain amount. Installment loans are generally repaid in equal amounts over a number of months or years. Installment loans can be used to finance consumer purchases such as appliances, cars, your truck, uh, school, like your college degree, things like that. The final payment on some installment loans may be different than the regular payment amount. Mortgages are loans secured by your home, usually, but mortgages can also be for refinance purposes too. Like you can refinance to get into a lower interest rate, for example. There's other products and services as well, um, starting with check cashing. Um, that's converting your check that someone wrote to you into cash. Could be like your birthday, for example. Someone gives you, when I was younger, I would get a check from my mom saying happy birthday. So I would go and I'd take that to the bank and I would convert that into cash. So that's check cashing. Money orders we kind of talked about. Money orders are basically the same as cash, um, a little bit different than a check. Think of it as like a guaranteed check backed by money because a money order is something that you're purchasing cash. Prepaid cards spend like money. You deposit cash onto them. Debit cards are linked to your checking account or your savings account, but remember the checking account is what you're using as your daily transaction account. You can have your savings account linked to your ATM card for the purposes of access to uh, pulling out money, for example. Um, Cashier's checks are similar to money orders. Um, the difference being is that the check is guaranteed by the financial institution that you're buying it from. Back up on the money orders real quick too. Money orders you can buy at the post office, for example. I think you can buy them at like Walmart now too. I think they have money services at the um, customer service desk. I'm almost certain. ATMs are machines that process a variety of different banking transactions, withdrawals. You can transfer money between accounts, things like that. Online and mobile banking can include bill pay services also. We also have like the P2P. person-to-person payments through things like Zelle, for example. Um, Other financial service providers, businesses other than financial institutions also provide some financial products and services. Often they only extend credit or provide certain services such as cashing checks. They generally do not accept deposits. Examples include, like I said, U.S. Post Office for money orders, stores that sell prepaid cards, check cashing stores and outlets that cash checks, payday lenders that provide small dollar short-term loans, pawn shops that provide small dollar short-term loans, vehicle title lenders, things like that, that you can use the title of your car, truck, or motorcycle, for example. These businesses may offer features such as being open late at night, where most financial institutions close prior to 5. They have their drawbacks. However, I think it's more important to understand what you're getting into. So read the fine print before you sign up for any of these services. There's many ways to select financial products and services from providers. One way to ensure that you're getting what you really need is to start with financial management needs. Some people may call this your money management needs. Financial product service providers can help you save, spend, manage, and borrow money. Your financial management needs may include having cash on hand to buy things you need, building credit, saving money, and or paying bills. Before we look at your financial or money management needs, we're going to look at a scenario that you can check out in the participant guide. In this try it section on page 8 of the participant guide, we have this situation with Susanna. Susanna has a full-time job and receives a paycheck every 2 weeks. She has had trouble in the past paying her bills on time, and she has a credit card debt that she wants to pay off, but she also wants to build an emergency savings fund as well. Susanna needs a car within the next year and wants to be able to get a good rate on the car loan. So, from the things that we already kind of talked about, what are some things that she needs? Cash or to have access to money from her paychecks. She's looking to improve her credit. She wants to save money for emergencies. She wants to save money for a car down payment. She wants the ability to pay bills and then borrow money to get a car. So, um, I don't, do we have it? So, what are Susanna's financial management needs, right? That's kind of what I just talked about. So, in this apply section, check it out after the workshop, but essentially check off what you need related on the money and finances for your current situation. So to save money for emergencies are my goals in a safe and secure place, to pay my bills in a safe and secure way, to send money to families and friends electronically, to get access to cash quickly, to borrow money to improve or build my credit, to build a relationship with a financial institution. What other financial management needs do you have? So we would use this section to talk about things like, well, I assessed my personal needs. I'm trying to build my credit, but I tried to apply for a credit card and was denied. So we may need to get a secured card through a bank or a financial institution. But anyway, yeah, check this out after the workshop. Um, it's going to give you a better handle on things such as, well, I don't need access to a money orders or cashier's checks. It may lead you into choosing a different financial institution over the other. I don't need a credit card right now, but I need access to a debit card, things like that, which rolls into my banking checklist. So we're going to go through um, and go through my needs and access, which is the first box that you're going to see in this apply it section. You can use the checklist to compare financial institutions and their different accounts. The different sections that we're going to go through that you're going to see in that try it section are going to be my needs and access, checking accounts, reloadable prepaid cards and other transactional accounts, savings accounts, debit cards and ATM cards, overdraft and overdraft fees, and other available services. Um, So for example, I don't think we have it listed here, but what you're going to see under the My Needs and Access is going to be, is the institution FDIC or NCUA insured? Is the institution a credit union, and am I eligible to join? Because remember, you have to have an association in order to join that credit union. Um, Under the checking accounts, reloadable prepaid cards, and other transactional accounts, things that you need to consider. What's the minimum opening deposit requirement? Some institutions require $10 to open an account, some require $100 to open an account. What's the minimum monthly balance that I'm required to keep in that account? These are some of the things that you're going to um, use as a research tool to decide what financial institution would be best based upon the type of account that you need, right? Will my money earn interest? So maybe you're looking to open up a checking and a savings account, line item number 3 here that you see. Well, what's the interest being paid? Um, is it a high yield account? What's the minimum opening deposit requirement? If I plan to have both accounts, am I able to access my money through the ATM, for example, which 100% guaranteed you're going to be able to. Let's talk about things, more things under bullet point number 4, debit cards, ATM. So, will I get a debit card or an ATM card, and when will I get it? Some financial institutions mail you the card, so you have to wait a week to get the card. Some financial institutions print you the card at the branch. Things to consider. Can I set up alerts for when my card's used? Um, are there any fees associated with the use of the card? Things to consider. Bullet point number 5, overdrafts and overdraft fees. Well, how much are your overdraft fees, Mr. Bank or Mrs. Credit Union? Um, Things to cross compare because not all fees are going to be the same. Um, so that's something to look into. Will the institution authorize payment of a check if I don't have enough money to cover it in my account? Will they allow you to overdraft the account? How much does it cost? Um, what fees does the institution charge, and what is the fee schedule? Things like this. Other available services. Do you have Zelle, for example, at your institution? Do I have access to money orders and cashier's checks? Oh, and by the way, how much do those cost? Because not all uh, fees are the same. And lastly, do you have the ability to open up a safe deposit box? Some people like to have a safe deposit box, which is a box that's in the vault of the bank where you can keep things in the box. Um, anyway, there's a lot of things to consider, but I think going through my banking checklist will help you determine um, what it is that you need. And then going through the 6 bullet points will help you kind of cross compare between uh, different types of accounts and different types of options that are out there. What does opening an account look like? So we're going to go over the benefits of a savings and a checking account, list generally needed, the items generally needed to open an account, a financial institution, and the steps involved. Explain how banking history reports are relevant to opening a checking or a savings account. Explain how to get a banking history report and dispute incorrect information, and identify options for opening an account despite challenges. So, key takeaway. Know the general process for opening a savings or a checking account, including options for when you're going to do it. So, add the following. So, safety and security from FDIC insurance, we kind of already talked about that, or NCUA insurance. Earning interest, we kind of already talked about that too. Convenience in paying bills or paying on routine transactions such as buying groceries. ability to build a relationship with your financial institution. One thing that we kind of talk about a lot in these financial literacy workshops is having a good relationship with the branch manager and all the employees at the branch, because you're never going to know when you need to go in and ask for a favor. Maybe you need an overdraft fee reversed. Maybe something like that. Maybe you need your you lost your ATM card, you need it now. Maybe they can overnight it to you. Things like that. So having a good relationship with your branch folks. Important consumer protections as well, such as those that protect you in the event of unauthorized transactions on your account. In the next apply it section in the participant guide on page 15, you can use the checklist to prepare for opening a savings or a checking account. This will give you a better understanding of what you need to apply. You can apply in person or online. Some people may find the thought of opening an account intimidating, or maybe they just don't have the time to make it into the branch. So this is why you would choose to do the application online. The application will usually ask you the following information: your full name and possibly any names that you've used in the past, your date of birth, your address, your social security number. The application will likely require other information. For example, you may need to provide your phone number and email address as well. You will need to provide information to verify that you are who you say you are. Showing the necessary ID is required, which often is going to be a state-issued ID or a driver's license. If you don't have one, maybe you could use a passport as another form of identification. You'll need money to make that initial opening deposit to establish your new account. Remember, the amount's going to vary depending on what bank you chose and the type of checking account you chose. If you're opening an account online or through a mobile app, it could vary as well. You may also need to sign several documents. If you're opening an account online, you may have to sign these documents electronically. You may need to activate your account tools, which are things like online access, access to the mobile app, setting up your debit card or your ATM card. If you're opening a checking account, you'll likely be asked if you want to opt into a program that handles overdrafts, which is when you don't have enough money in your account, and you want to use your card like as a point of sale. Will the financial institution allow you to overdraft your account, essentially allowing you to make that purchase? They're going to charge you a fee, but do they offer that? You will receive information called disclosures, either in paper or electronically. The disclosures explain key facts you need to know about the type of account that you're opening. Um, Banking history reports. The process that we discussed assumes that the person applying for the account is approved for the account, of course. However, not everyone is approved. Some consumer reporting companies keep track of negative information related to consumers and the use of their deposit accounts. Examples of this include something that's called check systems. These companies prepare reports often referred to as banking history reports. Financial institutions may use these reports to determine if they will allow someone to open an account. Banking history reports include information such as unpaid negative balances on accounts. This could have happened because of a check written for more money than what was in the account. It could also have happened if the account owner didn't close the account after they stopped using it and fees continued to be charged on the account. There also report suspected fraud on related accounts. Certain accounts closed by a financial institution, such as if the account owner mismanaged it. You have the right to pull your free credit report. You can also request a free credit report if your application for account is turned down by trying to open a checking account. Getting my banking history reports. So on page 17 of the participant guide, you can use this information that you see to get your banking history reports. You will likely not have a banking history report if there is no negative information on file. So remember we talked about check systems. There's also a company called Early Warning. So you can visit checksystems.com and get a free factor report. But remember, if there's no negative information, then you won't likely have a file. You can also visit earlywarning.com to look to see if they have a report also. But so uh, use this as a resource, but kind of what are the steps if you need to file a dispute if you find out that after reviewing your report, if you have one, if there's erroneous information on it. So, step one is to file a dispute with the consumer reporting company or the company reporting the error. Step two is to file a dispute with the financial institution that provided the information you dispute. Step three is to recheck your banking history report to make sure that the error was corrected and that it stayed corrected. Okay? And then we have on page 21 of the participant guide, in this apply it section, excuse me. There we go. My options for opening an account despite challenges. If you think that you do not have enough money to keep in an account, or if you think account fees are too high, you can ask a financial institution about whether or not they have any low cost account options. Okay. So there are many banking options that do not include costly fees. Some financial institutions offer low cost accounts with low minimum opening balance, perhaps as low as $5. Some financial institutions offer checklist checking accounts that cannot be overdrawn so that there will be no overdraft fees associated to them. The FDIC's Model Safe Account template details what a cost effective account could look like at FDIC.com. Find out if there are accounts that match your needs. A good first step can be talking to a financial institution employee at your local branch. Like I said before, it's a good idea to maintain a good relationship with the people at your local branch because they're there really to help and to assist you and to make sure that they're getting you into the proper account for yourself. Be sure to understand what you may need to do in order to avoid fees. For example, a monthly service fee may be waived if you set up direct deposit or keep a specific like monthly minimum in the account that may be required. If you have a negative banking history report, like we already discussed, you may be able to get into what's called a second chance checking account. These accounts may have special fees or rules associated to them. For example, before you can get the account, you may have to pay the fees that you owe for an account that you had previously, or complete a money management class, for example. If your application for account was denied because of negative information in your credit reports or low credit scores, ask the financial institution for options. There may be the ability for you to sign up for something like a secured credit card. They usually have relatively low credit limits. To get a secured card, you must make a deposit with the financial institution issuing you the credit card. So, for example, For a card with a $500 credit limit, you would have to make a $500 deposit into an account that would be linked to that card. But the nice thing is that those types of credit cards can be used to repair damaged credit. So it could be a good way to rebuild your credit. Um, if you cannot open a particular account, ask if you can open another type of account. Um, if you're unable to meet the minimum opening requirement for a checking account and a savings account is different, um, my recommendation would just be have them give you the menu I call. And essentially, what these are the disclosures that you're going to receive when you're opening the account that gives you all the accounts offered at the financial institution, all of the minimum opening deposit requirements, basically all the nuts and bolts that you would need to understand to figure out what account would fit best for you. But yeah, so in this section is kind of just for general purposes and processes, what you can anticipate needing to open an account, how to do it, and the different account options that you would have. So let's say that you were able to open the account. What do we do to manage that account? So in the third section, we're going to explain how to manage your checking and savings account effectively, identify the different parts and components of a check, how to track your transactions, and then explain how ATM cards, debit cards, mobile apps, and P2P transfers work. All right. So using a savings account. So we're going to start there. Um, and then we'll go over checking. Some of the information is going to be the same. So you can use a savings account to build your savings by depositing money into the account that is going to earn interest. So depending on the financial institution in the account, you may be able to deposit money in person. You might be able to do it through direct deposit with your employer or transferring money from an account. You may also be able to do it by depositing money at the ATM. You could also do it by using online transfer, maybe if you like the website or the bank's mobile app. The options that you have to withdraw money are going to follow suit in person, at the ATM. Savings accounts are designed to save money for the future. Remember, we kind of already talked about this. The checking account is what you're using as your daily transaction account. That's what the checking account is. The savings account is to build an emergency fund. Um, it can be used to, um, it's not really like that wealth building tool because the interest rate's a little too low. Essentially, it's for saving money for the future, different from the checking account that you're using every day. So you're not going to have frequent withdrawals on your savings account. Um, in fact, some financial institutions are going to limit the amount of withdrawals and transfers that you're going to be able to do on it. Essentially, savings account not designed for a high number of transactions. On page 24 of the participant guide, we have managing my savings account. Um, Ways to manage are going to be reading the rules of the account, understanding what fees are associated, what minimum balance requirements there are, keeping track of your deposits and withdrawals. You can keep record, it's kind of an old school way, but a transaction register. You can also do it based on looking at and reviewing your account statements. Um, you can also do so by opening your bank's app on your phone and going through your recent transaction history. There's a whole different ways of managing the savings account. But I would say it's easier to manage in the checking account because it's not a high volume account. You should only have some transactions in it, so it's not hard to manage. Where using a checking account is a little bit different. So generally, the checking account um, is used more frequently, right? So multiple transactions. Um, People use checking accounts to deposit money, pay their bills, make purchases in person or online, and at the ATM to access cash. When you open a checking account, you may get a debit or an ATM card linked to it. So a debit card, also known as a bank or check card, can be used instead of cash to make purchases. Unlike a credit card, the money comes directly out of your checking account. ATM cards allow you to use an ATM. A check is a paper doc. We'll talk about that a little bit later. Um, so a check is a document you complete that tells your financial institution to pay money from your checking account to someone else. We're going to look exactly what that is. Kind of old school, in fact. Um, I myself haven't written a check in so long, but I recently wrote a check 2 weeks ago because I had a doctor's visit that required me to pay like a copayment, and I had to pay by check. And it's so funny because I'm like, oh my gosh, I haven't written a check in so long. Do I remember how to do it? So we're gonna go over that. Um, you need to be careful of overdrafts. An overdraft is when an account transaction goes through even though you don't have enough money to cover it in your account. Examples of how you might overdraw your account. You may make an ATM withdrawal for more money that's in your account. You may make a debit card purchase for more money that's in your account. You could write a check for more money that's in your account. You authorize a vendor, such as a phone company, to withdraw money from your account and you don't have enough money in your account to cover it. Financial institutions offer programs to cover overdrafts or ATM and debit card purchases. Under federal rules, you can choose whether to opt into the program. If you opt into the overdraft program, the bank may honor an ATM or a debit card transaction that is more than your account balance. Expect to be charged a fee to process each transaction. Could result in fees that are $5 up to $35, up to just depends what the financial institution charges. That's where you're going to look at your disclosures um, prior to opening the account so that you know what they are. For checks and other types of payments, such as automated payments you set up through bill pay, your financial institution chooses whether to cover the check or other transaction that would cause you to exceed the balance. And this is what's associated or known as an NSF fee, which is a non-sufficient fund fees. Um, that could be charged as a result of your check being returned because you don't have enough money in your account. Here's an example um, with Rodney. There's $50 in a checking account with opt-in. March 1 transactions, $15 on a birthday cake, $25 in gas, $45 phone bill on autopay. Result, one or two overdraft charges of $35, right? So it just depends on whether uh, you opt in for these kind of things or not. Um, Other things to consider in your managing of your checking account. We already talked about direct deposit, allows money to be safely and securely deposited electronically into your account. This is good. Something that I saw often when I worked at the branch, when I was a teller, was there's sometimes if you mismanage your checking account, the financial institution is going to put holds on your checks. Direct deposit is a good way to avoid check holding processes because there are no check holds with direct deposit because the money is directly deposited into your account. So often what I saw was sometimes if an individual mismanaged their account and they had a lot of overdraft fees and a lot of NSF fees, non-sufficient fund fees because they had check return, because they were trying to access their money when they didn't have enough money in their account. often when individuals would come to deposit their payroll check or any check for that matter, it was often the um, it was often the process of the bank to put holds on those checks. So they would only give you $100 of that $1,000 check. Um, so a good way to manage around that is to set up direct deposit for everything that you have. Opposite of direct deposit would be automatic bill pay, which is super cool and easy so that you don't have to write the physical checks that we're going to talk about because we're going to talk about the check components. In fact, I think that's one of the last things we're going to talk about. Um, but I love automatic bill payment. You're able to schedule and send payments through your financial institution. And it's cool because it could be one time or it could be recurring. Maybe you have a recurring debit set up to automatically pay your cell phone bill. I know I do. I also have automatic payments set up to pay my internet bill. They're both through Spectrum. So I have that as an automatic bill pay. But other things could be like your utility bill. It could be anything. It could be another thing we have set up on automatic payment is the mortgage being taken out every month. Super convenient. It allows you to write less checks. The money comes out automatically, and it could be a clever way to manage your account because it's kind of a set it and forget it kind of thing. So yeah, pretty good. Um, oh, let me say one other thing though, going back to the overdraft that we talk about. If you're finding it difficult to manage the money in your checking account or to manage the use of your checking account, maybe the automatic payment is not a good thing because that could trigger overdraft fees too when those automatic payments are being made. So assess your situation and figure out whether or not that would be the best thing for you. All right. So the last thing that we're going to talk about tonight is going to be the components of a check, which I'm telling you, it's so funny because I just wrote a check 2 weeks ago and I was like, I had to ask my wife, I was like, I said, babe, it's been a while since I wrote a check. I was like, I forget the written amount. Like, okay, how do I do that again? And like, I've been in banking for 20 years. I guess it's not like riding a bike, but it is kind of like riding a bike because eventually it's like you figure it out. But um, let's talk about the components really quick. So, um, let me see here. So here's our example check. This is Maya Johnson. In section 1, we have name and address of the person who owns the account. So if this is where your account, this is where your name would be if it was your account. Okay, number 2 is going to be the date the check was written. This is actually super key component. Something that I ran into when I was a teller at the bank is that, and I saw this more often than you would think. Sometimes someone accidentally wrote the wrong year. They wrote like the prior year. We wouldn't be able to negotiate that check. We wouldn't be able to cash or deposit the check because it would be considered old. So make sure the date's accurate. Number 3, the number of the check. Checks come in a series, so you may be contacted by your financial institution if you use checks out of order. Like say you use check number 101 like here, but then the next check you write is number 200. That's a little fishy. So try to keep your checks in sequence. Also super important for when you're ordering new checks. Make sure that you're ordering it based on the last check that you use. So if the last check in your checkbook was 151, start with 152 on the next check order, for example. Number 4 is pay to the order of. This is the payee, the person or business being paid by the check. That's the person with the right to cash the check. Number 5 is the amount of the check written using numbers. One important thing in the difference between number 5 and number 6 is that the numerical portion in section 5 is not the legal amount of the check. So let's talk about number 6. Number 6 is the amount of the check written using words. It's best to make sure that there is no room to write anything else on this line. Draw a line from the end of your words to the end to all the way to the end, as you can see here, in between the written dollars and the word dollars printed on the check. This is sometimes called the legal line. If the amount of the check written in numbers does not match the amount written in words, financial institutions generally use the written word amount. So, if I was paying $75.85 and I numerically wrote that in section 5, but I wrote $7,500.85 in the written amount, that check is legally for $7,500.85. So remember, the financial institution's always going to negotiate the check based on what is found in number 6. Number 7 is your financial institution's name and address. Number 8, the for line or the memo line. You can write notes to yourself in that section. For example, groceries or utility bill. Number 9 is your signature. And in this case, Maya Johnson. Number 10 is the bank's routing number. This is not unique to your account. It identifies the financial institution that issued the check. Number 11 is your account number. That's your unique number that is associated to you, your account number. Number 12 is the check number. Not all checks will have the check number repeated down there. Some do, some don't. Lastly, in the participant guide on managing my checking account, this is on page 28. Use the checklist, and this is very similar to what we talked about in the savings account managing portion. And it's a good checklist to use on understanding how to manage your checking account. Read the rules of the account. Be sure you understand the fees associated with your account and understand how you're going to avoid them. Very similar to what we talked about in the savings portion. Keep track of your deposits and withdrawals. You could use a check register. You're often going to be given that with your checkbook. But if the check register is not for you, you can also track your purchases online or through the mobile app. This is what I do. I go through monthly to make sure those are actually the transactions I did. Make sure that there's no fraud on your account. Make sure that the financial institution is actually charging the right dollar amounts too. Keep track of your debit card usage also. That can include ATM withdrawals and deposits. Ask about linking accounts, linking your checking account and your savings account together. Manage it and use that savings account to build your savings balance by setting up automatic monthly transfers to your savings account, things like that. And ultimately, make sure that you're reading the disclosures prior to you opening the account so that you know the fees and the terms and conditions associated with prior to opening the account. Anyhow, for time's sake, that's where we're going to end it. Like I said before we started, this one's kind of like our banking 101, kind of like our general understanding of what you can expect for opening an account the different kinds of accounts, very general information, but happy to answer any questions if we have any. I know we covered a lot, but I hope that everything kind of makes sense.
Yes. All right. Well, thank you, Tom. I don't see any questions in the chat, but yeah, thank you so much, Tom. I appreciate it. And we'll catch you next week, right?
Yep, we'll
Okay,
see you
perfect.
next week. Thanks, Lisa. I appreciate
Thank you,
you.
Tom. Alrighty, bye.
Bye, y'all.